This is the Friday, July 8th, 2016 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
On the program, I had talked about wheat being really the only bright side in these markets, but that was a lie. We also had cotton up on the week, 82 cents, closed at 65, almost 66. Whoa. We moving higher?
Yeah, I think so. I mean, if any time wheat can be viewed as the bright spot, we have to find something else that could actually be a bright spot, and it might actually be cotton. We were in a sideways pattern for so long in the cotton market. Then we get these heavy rains and continued problems in the southeast growing area, and we finally start to see some commercial buying coming into cotton. We see a little bit of investment money coming back into cotton, and we've finally broken out of that pattern. So it looks like cotton may want to try to go up for a while. Still has some long-term bearish fundamentals to deal with, global bearish, fundamentally bearish global markets to deal with. But it does look like it wants to move up in here for a little while. So it was an impressive move. It kind of fought off what was seen in almost every other commodity sector and was able to close higher for the week. And so it does look impressive going into next week.
Is 70 in the cards? Is there $4 in this market?
I think it could move up that far. You know, again, if you know, investment traders are giving up on just about everything else, they're going to be looking for a market. They've got commercial buying coming in. A lot of times they'll follow that, and so they'll see that going on over in the cotton spreads, and that could entice them to come over for a while.
All right. Well, let's take a look at some of our questions from our Twitter followers, and we appreciate all the questions you submit. This one is from Chad in Randalia, Iowa, at Hort for Sci on Twitter. He says, if we get an island bottom in the corn market, what's the upside potential?
Island bottom is an interesting technical pattern. We left a gap down to start this past week. If we come back in on Sunday and gap the market back up, we leave a little area in there above this week's trade that classifies it as a technical bottom. What we could see in the corn market, we've got neutral future spreads right now, starting to lean a little more towards the bearish side with the way the carry's been strengthening. But we've got a neutral read on the market's forward curve. We could see 50% of what's been taken off the December contract come back on over the next period of time. I don't really know how long it might be. So if we dropped from 450 to roughly 350, that would say we might be able to make this run back up to about $4. And I guarantee you, if we see that, there's going to be a lot of people wanting to jump on and sell that mark. That $4 mark is very attractive sitting up there. So I think it could make that 50% retracement. It's going to take some time. It's going to have to chew through a lot of selling. But from a technical point of view, it certainly looks like it could happen.
Okay. Speaking of that exit, that large investment scale exit, we've got a question from Phil in Ontario, Canada. He's asking, will the non-commercial investment demand flight in ag commodities post-Brexit continue?
Yeah. A lot of it depends on the dollar. Right now, the euro's a wreck. British sterling's coming down, British pound's coming down. We're seeing some pressure still in the European stock markets. So again, the flight to safety has been over one of the markets has been to the dollar, and as long as money keeps coming into the dollar, outside of gold, the rest of the commodities are really struggling. Crude oil turned a bearish corner here this week, and what it comes down to, again, is they're going to look for these markets. Investors are going to look for these markets where future spreads are indicating some sort of a longer-term bullish supply and demand situation. Those are kind of hard to come by right now. That having been said, short-term, we could see some money come back in, all due to weather forecast changes. That's the only thing they're going to be playing for a while. So if it turns a little hotter and drier in the corn market, that could bring some short-term money rather than long-term money back into corn.
Okay, you talk about long-term looking fairly bearish, pretty well across the board.
Long-term, we were trying to turn this market bullish up through, say, the end of May into early June. And then we got up to the top side, up to the 2015 highs in the futures market and in the cash, and it came tumbling right back down to the low end of the market. So key support right around 3.5. So I think we're now in more of a sideways trend. We've hit the bottom. We've tested the low side of it. We really need to hold that level and then just muddle around between those two marks for quite some time.
Okay. Now, Phil has a second question for you. Let's go all the way to harvest.
Okay.
Phil says, is a 15 billion bushel corn crop possible this year? And what would be the ending stocks or price implications of that?
Well, anything's possible. My numbers right now, and I think we talked about it in the show, and I'm not a believer, it's going to be difficult for people to believe that in NASA's crop condition numbers weekly at all. But if you take them for what they're worth, right now it would project out to something like 170 bushels per acre, which is above USDA's June estimate, I think, of 168. And then we start dealing with their supposed increase in planted acres that we saw in the June 30th report. And you do all that, you come to about a 14.6 crop. But the other problem is, unless we see a sizable increase in demand over the fourth quarter, we may be underestimating old crop ending stocks to the tune of maybe 400 to 500 million bushel. So you add those 400 to 500 million bushels on top of what we've already got as far as beginning stocks, you can make the case for an extra 15 billion bushels out there once harvest comes around. So it's going to be tough. We're going to have to see old crop demand pick up. We're going to have to see possibly those acres numbers discounted somewhat in subsequent reports. I'm not anticipating that, but it could happen. And we're going to have to see some sort of weather scare in the market to really kind of settle things down here a little bit.
Okay, 15 billion, that puts us back on the low side of that price range you would anticipate.
Well, that probably takes us back down to at least the October 2014 lows of 318. I don't want to toss this three-letter word out like we are in corn right now, LDPs, but it is starting to be discussed.
Okay. All right. Well, Darin, before we let you go, you touched on it. I was just wondering if you could give us just another definition of an island bottom. What is an island bottom?
Island bottom is a technical term. It's a technical pattern, particularly when there was actual human beings in the pit. They would look for these where an island bottom is you gap down. Let's say you gap down from last Friday to this Tuesday, and a price gap is an area where no trade occurred between, say, last Friday's low and Tuesday's high. And then we muddled around here this week. We went to a new low, and then we bounced back on Thursday and Friday, and we closed Friday's session near not only the session high, but the week's high. We didn't fill that gap completely. So there's still this area of no trade. Now let's come back, this price area of no trade. Now let's come back in this coming Sunday night, and we have the weather that sparks some buying interest again, and we open well above this past Friday's high. Now we've got a gap up to go along with that gap down. We've got an area where no trade occurred. We left an island on the daily charts, possibly even the weekly charts. Back in the day when chartists meant anything and charts were interesting, this was viewed as a key turning point, something that didn't happen all that often. It was a key turning point. So something I blogged about, something we're certainly looking for, and I think it's going to make even Sunday night even that much more interesting.
All right, stay tuned.
Stay tuned,
at
absolutely.
the market open. Second question for you, Darin Newsom. As a technical analyst, you talk a lot on this program about stochastics. What is that?
Stochastics is simply market momentum. It's a way of measuring the momentum in the market. And stochastics come about. There's a couple different percentage lines that run across the chart. And it has to do with where you close in relation to the high or low of whatever time period you're looking at, daily, weekly, monthly, and so on. If you consistently over time are closing near the session lows or daily lows, weekly lows, whatever, then your stochastics are going to be going down, 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 indicating the momentum is, bearish, is going down. If, on the other hand, you're closing near session highs every day or every week, whatever it might be, that would be a more bullish stochastic read. It's when you get over, what I look for is when things start to change. Once you get over 80%, that would be a selling opportunity, or below 20%, that would be a buying opportunity. It's not an absolute, but that's what I start to look for. Right now in the grains, corn and wheat are both well below 20%, which would play into this possible island bottom in the corn market, and maybe even somewhat into this little rally that we've seen in the wheat. But that's what you look for. That's what I'm looking for in stochastics. It's just momentum. Are we getting overdone one side or the other?
All right. Well, Darin Newsom, thank you so much for taking the time to join us this week.
Thank you, Mike.
And if you believe in this service that's been provided each and every week for the past 41 years, go to iptv.org/market-to-market, click on the donate button on the top of the page, and help support future editions of the program. Thank you so much for watching and for submitting your questions. Please keep it up, and we will get expert analysis straight to you.